Welcome to the Deep Dive. We're here to unpack interesting ideas, get you informed fast. Ever thought about how your feelings, your actual emotions, might be driving your investment results more than just the numbers? And what if there's an investing approach that could act as a sort of, antidote to all that financial worry?
That's exactly what we're digging into today. We're drawing on Jenny Harrington's book, Dividend Investing. She's the CEO of Gilman Hill Asset Management. And her book really hits on something interesting, the practical and the emotional side of dividend investing, especially for investors who are, thoughtful and disciplined about it.
Right. So our mission here is to explore how that steady dividend income can bring stability, emotional control, really, in markets that feel anything but stable sometimes, helping you feel more confident, more informed. So how does this work in practice? Let's maybe start with the basics, which can be surprisingly, well, misunderstood.
Yeah, absolutely. So a dividend, at its heart, it's just a regular cash payment. The company sends it out to its shareholders, usually every quarter. And the key thing, often missed, is that this payment, it's generally not bouncing around with the stock's daily price swings. Plus, it often gets better tax treatment.
Okay, so it's like a separate signal from the company's health, not just market noise. But, I mean, why do companies do it? Do all mature companies eventually pay them? Or is there a strategy behind paying dividends?
Yeah, good question. Companies mainly pay them to attract shareholders, yeah, but also to signal confidence, like, hey, we're solid, we expect good things. It shows financial discipline. Think about a company's life cycle. Early on, like Chevron, way back when, they plow everything back into growth. But once they mature, become huge cash machines like Chevron now, or, the big tech players, Microsoft, Apple, they start returning some of that cash. It's a sign they've arrived, financially speaking.
It's funny how opaque that can be. Judy mentions the story, right? About an office furniture salesman managed his own money, but didn't really grasp why companies paid dividends. Just shows you even smart people can miss these core ideas sometimes. It's like knowing how to drive without knowing how the engine works, sort of. But okay, beyond the nuts and bolts, you mentioned the emotional angle. That's where this gets really interesting, doesn't it? The comfort factor.
Exactly. This is what Jenny argues is the biggest benefit, maybe. The emotional comfort translates into better behavior, your behavioral edge. She tells this incredibly powerful story about a client, Rick. This was during the 2009 financial crisis. Markets melting down, S&P down, 60%. Jenny calls him, bracing him, saying, look, all bets are off. We could easily drop another 10%. And Rick, his question just cut right through the panic. He asked, hey, Jen, are my dividends safe? And she says, yes, they were. And he goes, well, okay, if my income is safe, then I'm fine. Don't worry about me. I'm fine. Just like that.
Wow. That really illustrates it. That focus on the income, not the fluctuating principal value. It changes the whole feeling. How does that steady income fight against that urge to, sell at the bottom, like Peter Lynch talked about with his fund?
It acts as a psychological anchor. That consistent cash flow helps you resist the panic button during those rough patches, those bear markets. Think about Maria, the retired journalist Jenny mentions. Her $40,000 in annual dividends means she's calm. She doesn't need to sell her stocks when they're down. Compared to Allison, the engineer, her growth portfolio tanks, and the falling number makes her feel like she has to sell, often locking in those losses. And that ties right back to Peter Lynch's point about the Magellan Fund. The fund did great, but the average investor lost money because they jumped in and out based on emotion. Dividends help you stay put.
Okay, but it can't be that simple, right? Just buy high-yield stocks and relax. There have to be pitfalls, like the value trap.
Absolutely. That's a critical piece. You can't just chase high yields blindly. A value trap looks like a great deal, big dividend, seems sustainable. But the company is actually sliding downhill. The stock price drops so much, it just wipes out any income you got. You know Tolstoy's line, all happy families are alike. Each unhappy family is unhappy in its own way. It's kind of like that with investments. Failures are often unique.
And Jenny gives some pretty stark examples of these traps, right?
She does. Take New York Community Bank, NYCB. Looked like a bargain after an acquisition. But then it turned out management couldn't really handle the integration. It revealed basically a weaker company, weaker team, not a bargain at all.
Ouch. What else?
Lumen Technologies. Paid dividends consistently, yeah, but underneath a broken balance sheet, just too much debt they couldn't overcome. The stock price plummeted. Or Cherokee, the clothing brand, iconic name, high yield for a while. But they tied their entire fate to Target. And when Target shifted towards its own private labels, Cherokee was left high and dry. A dying business, essentially.
So the takeaway is clear. Looking only at the yield is dangerous. You have to do the homework, dig deeper. That knowledge compounds. just like the dividends themselves, hopefully.
Exactly. Which brings us back to Jenny Harrington's core idea, really, the whole point of saving and investing. It's ultimately about bringing you comfort, peace of mind.
It's less about picking winners every time and more about finding a strategy that lets you sleep at night, right? So the question for you listening is, what approach gives you that emotional comfort? The kind you need to actually stick with your plan, good times and bad.
Yeah, think about it like this. A well-built portfolio, especially one throwing off dependable income, it should feel like sailing on an ocean liner. The market might have its low tides, its storms, but you're steady. You can ride it out, enjoy your life without that constant knot of financial worry. Find that calm in the storm, that's the goal.